Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Arrow Financial Corporation Annual Report. Arrow Financial Corporation offers a wide range of financial products and services to both commercial and individual customers. At the core of their offerings are deposit products such as demand deposits, interest-bearing checking accounts, savings deposits, time deposits, and other time deposits. In terms of lending activities, Arrow Financial provides various types of loans including commercial loans like term loans, time notes, lines of credit, and commercial real estate loans to finance property purchases or improvements. They also offer consumer installment loans for personal expenditures, personal lines of credit, overdraft protection, and automobile loans. Beyond traditional banking services, Arrow Financial offers additional products such as retirement planning, trust, and estate administration services for individuals, as well as pension, profit sharing, and employee benefit plan administration services for corporations. Their insurance agency services include group health care policies and life insurance, property and casualty insurance products, and investment advisory services to their proprietary mutual funds. Furthermore, Arrow Financial holds a real estate investment trust, REIT, and maintains an indirect lending program. With over 160 years of experience since its founding in 1851, the company has established itself as a comprehensive financial institution catering to diverse customer needs. The stock price of Arrow Financial Corp., AROW, has experienced a significant increase over the past year, rising by approximately 60% from its lowest point in the last year. This growth can be attributed to two key events: the strategic acquisition of Adirondack Bancorp, Inc., and strong financial performance. The announcement of the acquisition on February 26, 2026, was a major catalyst for the stock price increase. The deal, which is expected to close by the end of the second quarter of 2026, will expand Arrow's operational footprint into new regions, including the Adirondack region and the Mohawk Valley. The acquisition also brings significant financial benefits, with the combined company projected to have pro forma total assets of $5.4 billion. In addition to the acquisition, Arrow Financial Corp. Reported strong financial results in 2025, which likely contributed to investor confidence. The company announced fourth-quarter net income of $14 million and full-year net income of $44 million, demonstrating its ability to generate profits. These positive developments have driven the stock price upward, with periods of growth exceeding 31.75%. Overall, the strategic acquisition and strong financial performance have been the primary drivers behind Arrow Financial Corp's stock price increase over the past year. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified in several key areas. On the growth side, net interest income has increased due to changes in balance sheet composition and market interest rates. Non-interest income has also grown significantly, driven by fiduciary activities, fees for services, insurance commissions, and gains on securities transactions. Strong demand for residential real estate loans and significant growth in consumer loans have also contributed to revenue growth. In addition, payments received from Arrow with respect to junior subordinated debentures and current dividends received by Arrow from Arrow Bank have provided a boost to revenue. On the other hand, economic downturns have reduced demand for fee-based services, while competition from other financial institutions has impacted growth and profitability. The failure to complete the merger due to regulatory issues or other conditions not being met has also resulted in revenue decline. Furthermore, cybersecurity breaches or other security problems can disrupt business operations and financial condition, leading to a decline in revenue. Overall, these factors have had a significant impact on revenue growth or decline, highlighting the importance of adapting to changing market trends and customer demands while managing potential risks and challenges. The net income and profit margins of the company underwent significant changes between 2024 and 2025. On one hand, the net income increased by 48% from $29,709 to $43,953, indicating a substantial growth in revenue. This trend was consistent across various pages, with some fluctuations in specific amounts. However, there were instances where the net income decreased, such as a 9.8% drop from December 31, 2024 to December 31, 2025. In terms of profit margins, the net interest margin increased by 16% from 2.72% to 3.17%, indicating improved efficiency in generating revenue from interest-bearing assets. Additionally, the net interest margin rose by 18% from 45.1% to 53.6%. However, there were instances where profit margins decreased, such as a 4.4% drop from December 31, 2024 to December 31, 2025. The reasons behind these changes are not explicitly stated in the provided text. Nevertheless, it can be inferred that the company's revenue growth and improved efficiency in generating interest income contributed to the increase in net income and profit margins. However, the decrease in some instances may be attributed to various factors, such as increased expenses or decreased demand for certain products or services. The company's financial performance indicates a positive trend in its operating cash flow. Despite an initial indication of negative operating cash flow on page 26, further analysis reveals that net income exceeds non-interest expense, suggesting a more favorable position. The operating cash flow is explicitly stated as positive on page 32 and reinforced by the summary on page 70. Additionally, the total amount of loans maturing with fixed interest rates is significantly lower than the company's operating income, as noted on page 37. Furthermore, the net cash provided by operating activities for 2025 is $41,280, as stated on page 55. This consistent evidence confirms that the company is indeed generating positive operating cash flow. The company's debt level has undergone significant changes between 2024 and 2025. While total liabilities increased by $108,563, total borrowings decreased by $4,335. Long-term debt remained relatively stable at $20,000. However, the net loans and deposits showed an increase of 2.1% and 3.4%, respectively. The total debt level for Arrow and Arrow Bank also saw a significant increase from $665,180 to $919,633. In terms of interest expenses, there is a clear trend of decrease between 2024 and 2025. Interest expense decreased by 7.55% or $6,278, with a more substantial drop of $6.3 million, 7.5%, reported on another page. The total interest expense also decreased from $83,261 to $76,983, while interest on deposits and borrowings saw a significant decrease from $84,489 to $77,209. Overall, the data suggests that both debt level and interest expenses have changed significantly between 2024 and 2025. Management is optimistic about the company's outlook, citing strong capital position and improving financial results. They expect continued profitability and strong asset quality, driven by loan growth and higher average loan rates. However, they also acknowledge potential challenges from uncertain inflationary outlook, interest rate risk, and regulatory complexities. To address these risks, management emphasizes maintaining sufficient funds to meet obligations, generating transaction accounts, and managing deposit competition. They also highlight the importance of responsible business practices that create long-term value for shareholders, customers, employees, and communities. In terms of strategy, management prioritizes investment in employee well-being and performance, while also focusing on managing interest rate risk through derivatives and reducing deferred tax assets by a valuation allowance. They aim to achieve an inflation-protected rate of return in the pension plan and invest up to 10% of common stock in the plan's assets. Overall, management is committed to creating long-term value for stakeholders while navigating potential challenges in the industry. The bank's acquisitions and divestitures have been a significant aspect of its financial activities over the years. On the acquisition side, the bank has made several notable purchases, including the merger with Adirondack, which likely expanded its customer base and market share. Additionally, the bank acquired various assets such as CRE participation, other real estate-owned and repossessed assets, equity method investments, bank-owned life insurance, transferable federal energy tax credits, and energy production credits. The bank has also made strategic investments in limited partnerships that acquire, develop, and operate low and moderate-income housing. Furthermore, it purchased life insurance policies on certain employees, key executives, and directors to offset potential future liabilities. The acquisition of Arrow common stock up to 10% of the fair market value of the plan's assets at the time of acquisition is another notable transaction. On the divestiture side, the bank has sold portions of residential real estate originations in the secondary market, which likely helped reduce its risk exposure and improve liquidity. It also terminated fair value swaps designated as hedging instruments in the third quarter of 2025 to minimize potential losses. Furthermore, the bank retained servicing on residential real estate loans primarily sold to Freddie Mac. Overall, these acquisitions and divestitures demonstrate the bank's strategic efforts to manage its assets, reduce risk, and improve financial performance. Based on the extracted summaries, it is clear that the company has taken steps to reward its shareholders through both dividend payments and share buybacks. The company has a history of paying dividends to its shareholders. As stated in the summary, the holding company paid cash dividends of $18.9 million in 2025, indicating a commitment to returning value to its investors. Furthermore, the company's decision to pay dividends is reinforced by the statement on page 115 that it has indeed paid dividends to shareholders. In addition to dividend payments, the company has also engaged in share buybacks. According to the summary, the company repurchased approximately $9.9 million worth of shares, 377,000 shares, in 2025 under its share buyback program. This demonstrates a proactive approach by the company to reduce its outstanding share count and potentially boost earnings per share. Overall, these actions suggest that the company is committed to creating value for its shareholders through both dividend payments and strategic capital allocation decisions. That concludes the financial summary for Arrow Financial Corporation. Feel free to comment below, and I will be happy to answer them when possible.